All right. This is podcast number 543. Welcome to the Financially Fit Business Podcast. Here you discover ideas, tactics, news, and information that matters to the health of your business or your clients' businesses. I'm your host, Ruth King. Here is how we will help you increase the financial fitness of your businesses today. In the previous episodes, I gave you parts of a financially fit business, tracking and looking at overhead costs per unit of revenue and net profit per unit of revenue. In this episode, I'll discuss parts 3 and part 4, pricing and recurring revenue. So let's get started. Pricing. I always start at the bottom up, like I start budgeting from the bottom up too, but that's a topic for a later podcast. But let's talk about pricing. Once we know what net profit per unit of revenue we want, and we have calculated the overhead costs per unit of revenue, then we have our gross profit per unit of revenue. We know what our direct cost is per unit, and then we have our price per unit of revenue. I mean, it literally is just taking the P&L, the profit and loss statement, backwards and calculating revenue per unit, and then how many units do you want to sell? Okay. That's the budget for all intents and purposes. But think about it from a pricing perspective. You may have dynamic pricing, and here's what I mean by that. In slower times of the year, if it's a seasonal type business, the net profit per unit might be slower because you just want to make sure that there's enough revenue coming in the door to cover overhead, and you make it a lot of revenue, and because your net profit per unit of revenue is higher when it's busier. I mean, if you look at how airlines do their pricing, it's crazy, because when they don't have seats filled, I mean, I've been on Delta for more than 40 years now, and I've watched them over the years. When they want to fill an airplane, they come up with some really great deals. And yes, you have to take specific flights and specific days. But sometimes if you have the time or you have the ability to go and they have the airplanes that are ready, you can get some phenomenal deals to go to some phenomenal places. So they use a dynamic pricing, and generally the closer it gets to the time of departure, the more the price is. Generally, I'm not saying all the time, but a lot of the time it is. So, pricing, once you know the net profit you want and you know where break even is, then you can determine pricing based on any number of different factors. Seasonality being one of them, product mix being another one. And I'm going to bring in the recurring revenue piece of this also, because a lot of times you can do a recurring revenue type of product base. So, for example, let's take what you do on a daily basis. You probably have a cell phone subscription, because most of us have cell phones these days. You may have a gym membership. You may have a Netflix membership. You might have, for those of you who are younger, games. And what are these all doing? They're recurring revenue. Now, from a business perspective, a lot of the software that you have, you pay recurring revenue on a monthly basis, for support, or something along those lines for your software packages. And they have add-ons, which are X number of dollars a month, and it just goes and goes and goes on your credit card. And that's the recurring revenue. And a lot of times, the recurring revenue piece is not priced at a high net profit per unit. It's priced, a little bit above break even, because they know they've got you. They've sucked you into absolutely everything else that you need. Because once you're in and you have this little package and this little package, and you've got support for this accounting package, or CRM package, or any number of industry packages, you're not going anywhere. So they look at the recurring revenue as the ability to suck you in at a lower price, so that you will buy all of their other services and all of their other products at regular prices. So those are the types of things that you really and truly want to look at from a recurring revenue perspective. All of us, it does not matter what business that you are in, can have recurring revenue. All right. And you should have recurring revenue. The only ones that I can't think of with recurring revenue are that fireworks shop that I spoke about in a previous episode, where they were only open 6 weeks a year. I mean, it's really hard to do recurring revenue on a seasonal business like that. But, most of us are in businesses that we can produce recurring revenue because we have the ability to take care of our customers and our clients every day, sometimes every week, every month, so that you can make sure that you're in a situation where you suck them in with a lower price, and then you have everything else that they need, and so they're not going anywhere else. So I look at pricing, as very dynamic depending upon what you're trying to do with respect to pricing. And when we get back, I'm going to give you some examples of pricing and recurring revenue pricing so that you can decide whether you want to use this for your business or, look at changing some of the things that you're doing to make recurring revenue a part of your business. And the reason that you may want to use recurring revenue is it is flatline revenue. You get it every single month, assuming that you perform the services or whatever you're promising for the recurring revenue. It's not like tax season where cash flow goes crazy high for 3 or 4 months and then drops off. I mean, if you're comfortable with that and you don't need it and you save it and everything else like that, that's fine. But wouldn't it be nice to know that you're getting X number of dollars in the door for performing Y services on a year-long basis and have tax be incorporated into that? We'll cover all of that when we get back from break. Thanks for listening to the Financially Fit Business Podcast. We'll be right back. All right, this is part 2. 5, 4, 3. We're back. Thanks for listening to the Financially Fit Business Podcast. Before the break, I talked about pricing as it relates to the P&L. You start with your revenue per unit of revenue. You've got your direct cost per unit of revenue, which gives you your gross profit per unit revenue. Your overhead cost per unit of revenue. And then you have your net profit per unit of revenue. And we also talked a little bit about recurring revenue and how every business can have a piece of that. So I'm going to give 2 different examples, right? Let's take one out of the contracting industry because I know it really, really, really well. And, most contractors, and you may also have a maintenance plan. You might have a maintenance plan for your heating and air conditioning system, your plumbing system, your house, your, water heater, electrical systems. Your lawn care might be on recurring revenue. I mean, there's so many different recurring revenues that you can have for a business or for a, basically for your home or for your business. And so then let's look at it, because if there's a recurring revenue component to it, generally the recurring revenue, the maintenance plan for your heating and air conditioning system, for example, is priced with the net profit being very, very low, almost at break even. Now, my rule is that you have to at least break even on all recurring revenue, but it's generally priced very competitively because people compare maintenance plans from company A, company B, company C, and you'll want to make sure that your maintenance plan includes things that are very valuable to that particular customer. But once you're on this maintenance plan for your heating and air or your plumbing or, lawn care or pest control, whatever it is, you're not going anywhere. You got termites, guess what? You're going to use the pest control company that you have the maintenance plan with. If you need a new water heater, guess what? You're going to use the company that you have the maintenance plan with. If you need a new heating and air conditioning system, guess what? You're going to use the maintenance plan of the company, or you're going to use that company to install that heating and air equipment because you're on their maintenance plan as a general rule, as long as you take care of the customers that you have in those maintenance plans. Now, what if you're a bookkeeper? Well, you can provide the books, for a flat rate every single month. And most bookkeepers do. That's recurring revenue to them. It's not based on the number of hours that it actually takes to produce the financial statements. It is done on a flat rate basis. And you can do that from an accounting standpoint too. And I know it's a novel approach and a novel thought for a lot of you, but what if you took the financial advisory services component of it and you actually sat down with them and went through their financial statements with the graphs once a month, for half an hour? It could be done through Zoom. It doesn't have to be done in person. And, what if you included the bookkeeping piece of it and the tax piece of it and, all the different things that you provide to them, figure it out for a year. Let's say it's, $10,000 for now I'm making it $12,000 for the year. And you can say to your client, we'll include X, Y, Z, A, B, and C for $12,000 a year, which is $1,000 a month. And you propose it to them at $1,000 a month rather than $12,000 a year. Now, before you say, well, what about audits? And what about, valuations and all these things that, are usually, you can't flat rate. Can't's not the right word. I don't necessarily like the word can't, but are very difficult too, because you never know what the IRS is going to do or what the audit for a state sales tax audit might be, or a labor audit, or anything else like that. So you can do in your engagement letters, you can say, okay, for these particular services, include tax preparation in there, you will invest $1,000 a month. These services are excluded. Obviously, audits, sales tax audits, IRS audits, state audits, whatever, business valuations and things along the lines like that. And you might find from a recurring revenue perspective that, number one, it gives you a flat line of revenue every single month, and it's not up and down like a seesaw, but it also gives the client more ability and more comfort with calling you and asking questions, because they know they're not going to get charged on a billable hour per se. And if you include, let's say, a half an hour a month for financial review and another half hour a month for questions or whatever else it is, and include that, maybe it's $1,100 a month or $1,200 a month, whatever, it is from that perspective, your clients, number one, will feel more comfortable with you. They'll value you that much more. But it also is a way that you have recurring revenue for your practice, and makes a whole lot of sense to do that. So from my perspective, you're looking at it where recurring revenue is the baseline for whatever you do, whether you're a contractor, whether you're a restaurant, and I'm going to cover that one in a minute, or whether you're an accountant or bookkeeper. This is your baseline, and then everything else is on top of that. They're not going to go anywhere for an audit if they're using you and they're comfortable with you. All right. So let's talk about the meals one, because, people say, well, how can you do recurring revenue for meals? It's done a little bit differently, but it's still the same type of thought. And it could be for revenues and product-oriented types of revenue-producing things. So, for example, one of the largest steakhouse in Florida, I know the owner of that steakhouse, or when he did own it, what they did was they had the birthday of they had a membership club that you got points, and most of the restaurants are now doing this. So they tie you to the restaurants, and you come in more often because, for however much you spend, you get X number of points, and they can add up to a free drink or a free dessert or eventually a free meal. On your birthday, you might give them a free meal if they bring 5 people with them or 4 people with them. So it's done a little bit differently, but the idea is to still tie that particular person to that restaurant so that they frequent that restaurant that much longer. You may belong to some of those clubs, some of those restaurant type clubs. You go into many retail stores now, then you can join, whatever, a product is free when you buy 12 or 13 or whatever, so almost everybody is on the recurring revenue bandwagon, and you can do it too. So think about that, and think about it because it will tie your clients to you. It will tie your customers to you. And when it's time for the more expensive types of services and products that you provide, they're not going anywhere because they trust, they like, and they're already comfortable with using your services. So thank you for joining us. Choose one thing that you discovered and implement it in your business. These ideas, tactics, and strategies help you make more money, have more free time, and give back. If you like today's program, spread the word. Please review this podcast on any device you're listening to it on. Help a business owner improve the health of his company. For comments or questions, call me at 770-729-8000 or email rking@financiallyfit.business. Thanks for listening. Have a great and profitable day.